Okay, good afternoon, everyone, and thank you for joining us for today's webinar, GASB 96, What You Need to Know. My name is Jared Cottrell. I'm a principal with Ray & Associates, and I work in our government gap department, so I've worked with a lot of you, I'm sure. A number of us have been out to meet with a lot of you, and we've heard from another good number of you about this GASB 96, this new implementation that we have to deal with this year. So we thought that this webinar would be a good way to just touch base with everyone at once, dispel some of the myths that are out there, hopefully make you feel a little more at ease about what it is that we're going to be needing from you, and I think you'll feel at the end of this, you'll feel a little bit better about what we need to do to get through the implementation of this standard. Before we get started, just a few housekeeping items. I mean, we're going to hopefully get a lot of feedback from you all on this and a lot of questions. Go ahead and post those questions or anything that's on your mind into the chat box on your screen there. We're going to have some time for some Q&A in the end. We'll be monitoring that. That said, in respect of your time and all of our times for that matter, I mean, we probably won't get through all of the questions. So what we'll do at that point, anything we don't get through within the hour here, we'll take some time after the webinar to review those questions, come up with some answers, and then distribute them to all of you via email soon here after the webinar. So LeaseCrunch, I know the initial invite came out and said, hey, Jared's going to be presenting on this, and then all of a sudden it was LeaseCrunch is going to be presenting on this. We have a great working relationship with LeaseCrunch, so they definitely, I think we help each other out with the implementation of 96, but they're going to be helping us out in this regard as far as driving the ship on the majority of this presentation. I'm kind of here for commentary purposes and to add a little insight specific to you all, specific to school districts, but they do this for a number of their clients throughout the state. And LeaseCrunch, for those that you don't know, is kind of the behind-the-scenes software package that we're using here at Ray. Once you get us your information, we used it for GASB 87 with leases. We're going to use it again for GASB 96 with SBITAs. And that's just kind of the software package that's going to be kicking out the product that we use to create journal entries. So again, good working relationship with LeaseCrunch. So today's webinar is going to be presented by Jess Vento. Jess is the Senior Director of Accounting with LeaseCrunch, and then Andrew Strozinsky, who is the Senior Enterprise Account Director with LeaseCrunch. And again, I'm going to be chiming in on a couple of slides where I think I have some value to add related specifically to school districts and our clients here in Ohio. So without further ado, Jess is going to kick things off here today. So welcome, Jess.
Thanks, Jared. Thanks for having us. Welcome, everyone. My name is Jess. I've been at LeaseCrunch for about 2.5 years and spent most of my career in accounting relating to leases in the property management world. So hopefully we can bring some leases, and we're going to talk about SBITAs. I'm already going to make a joke about how many times I say the word lease where I really meant SBITA. Or subscription. That as Jared and I were prepping for this yesterday, it happened about 4 times in about 10 minutes. So it's likely to happen. A little bit about us, if you're not familiar, we're fastest and easiest to use lease accounting software on the market today, comprehensive cloud-based solution. We work with many CPA firms to help them and their clients implement the new lease accounting standards, 842, IFRS 16, GASB 87, and GASB 96, designed by CPAs for you guys, for CPAs, which is one of my favorite things about our software. So our agenda today, this is a loose agenda. We'll talk about all sorts of things, specifically your 96 overview, what part of subscription-based costs should be capitalized, how do we measure those initial subscription liabilities and subscription assets. We'll talk a little bit about our disclosure requirements and some implementation planning as well. Before we begin, I always like to spend a minute to talk about dates. I think that we hear from a lot of our clients that they're a little bit confused about dates sometimes. So 87, we know that we've got a year under our belt already with regards to leases, and GASB 96 is really just 1 year after that. So for those of you who have a 6/30 fiscal year end, which based on my conversation with Jared is most of you, you're going to be getting going right now and talking about your subscription-based agreements, figuring out what do we need to do to get those on the books. Before we talk any more about that subscription-based information technology arrangement, I want to take a second to talk about the words. As you might imagine, as being a senior director of accounting here at LeaseCrunch, I spend a lot of time reading and listening to content about these particular topics so that I can teach all of you all the things that I know. This is very interesting because subscription-based information technology arrangements has an acronym of SBITA, and we have lots of different names for it or lots of different ways of talking about it. So you might hear folks calling them arrangements, SBITAs, sub-ITAs. We reached out to the GASB and they said it's SBITA like Speedo, which is a little weird, a lot weird. But you might also see organizations talking about it as a license or an agreement or a contract. I'm going to say SBITA today, and I promise I'll probably also say the word lease where I didn't mean to. So keep track of that and put that in the comments later. A little bit about GASB. Where did we, how did we get here? GASB 96 establishes a definition for those subscription-based information technology arrangements. We're calling those SBITAs, and provides uniform guidance for accounting and financial reporting for those transactions that meet the definition, and is for users of software, not vendors. It's interesting that we hear that conversation happening a little bit too. So we want to make sure that clarify that this is for government-based users of software. So school districts, universities, municipalities, etc. The standard also provides a greater consistency in practice, which is what the new accounting standards seem to do these days, and establishes capitalization criteria for those implementation costs. We'll talk about that later. Enhances our relevance and reliability of your financial statements. And then the disclosures tell users the scale and importance of those SBITAs or those SBITA activities for your government. If you're familiar with GASB 87, you're going to notice a lot of similarities with GASB 96. Not quite a find replace, but very similar framework. So if you're already familiar with leases, you probably already have a good understanding of GASB 96. So let's talk next about the definition of a SBITA. Subscription-based information technology arrangements are contracts that convey control of the right to use another party's IT software alone or in combination with tangible capital assets as specified in a contract for a period of time in an exchange or exchange-like transaction. We're gonna break that down in a minute. But examples of those, and we'll talk more about examples later as well, but it could be software as a service. Lots of subscriptions these days are software as a service, cloud-based solutions that we're using. Might also be platforms as a service or infrastructure as a service. When I was doing research for this particular topic, I spoke with a friend of mine who works at a local university and kind of, explained what I was working on and asked her for some examples of what they see. I also took a look at my daughter's middle school. She's going to high school this year, but what do they use? Things like Skyward, Canvas, Dropbox. Their school lunch program is called Get Mobile. HR software like PeopleSoft, LeaseCrunch could be one of those solutions as well. Important to note that a SBITA could be just a subscription, or it could be in combination with tangible capital assets. So it's important that we be sure to understand that a SBITA includes a contract that meets the definition, but might not be called that. Just like with leases, we had things that were not called leases that fit the definition. We're gonna see the same thing here. So let's break down that definition. First, we need to talk about control. To have control in directing the use of an asset, a government must have both the right to obtain a present service capacity from the use of that asset and the right to determine the nature and use of it. So basically, we get to decide what we're going to do with this subscription or this asset. That level of control is judgment-based, which if you're familiar with new accounting standards, they're pretty judgment heavy. We have to make some decisions about how we're going to handle these things moving into the future. Next is period of time. This is the term that the government has a non-cancelable right to use that underlying IT asset. So basically I can't opt out. We're going to talk more about term in a few minutes. And then finally, an exchange or exchange-like transaction. This is one that occurs in an orderly fashion. Monthly payments, annual payments. Sometimes you might have exchange-like where you're not exchanging cash. It could be something else. In conclusion, on this particular topic, SBITAs are temporary in nature. They grant a government control of the right to use an IT vendor's assets and for a period of time in an exchange or exchange-like transaction. So next, let's talk about term. Like I said before, there's a lot of similarities between GASB 87 and 96, and the term language is identical. The term is the period in which a government has a non-cancelable right to use an underlying asset, plus their options to extend or terminate or not terminate, plus the vendor's options to extend or not terminate. So non-cancelable, that's really what we're looking at here. Periods in which the government and the vendor can cancel without permission from the other party are considered cancelable terms, and those are excluded from GASB 96. So basically we're saying, what's my non-cancelable right? What's my options? Am I reasonably certain to do so? Extend or terminate early? And what's the vendor's options? Usually I would say that a vendor's option to extend is usually reasonably certain. Generally the vendor wants your money. They're in the business of making money. So generally they're going to extend. So if you're thinking about it from a vendor's perspective, that's kind of the thing we talk about most often. Other things that are going to affect your term are going to be your fiscal funding or cancellation clauses. This allows the governments to cancel a SBITA typically annually if they did not appropriate funds for that subscription payment. This clause should affect the subscription term only if it's reasonably certain to be exercised, and also isn't a crutch to get out of a contract. Rolling monthly or month-to-month SBITAs are also something we need to take into consideration when we're talking about the term. Those are not enforceable if both parties have the option to terminate, and they could cancel at any time. So it's important to know what those provisions are. And GASB 99, which is the omnibus, came out, I think 2 years ago or last year, clarifies the provisions that give the party the right to terminate. So basically clarified to say terminating for cause is not a termination clause when we're thinking about our term. So basically if you can terminate for non-payment, that's not reasonably certain to terminate. That's a different kind of clause, not included in our term. So at the commencement of the term, we're going to assess factors that are relevant to the likelihood the government or the vendor will exercise the options we discussed on that prior slide. Those factors might be contract-based, might be related to that underlying IT asset. We might take a look at the market. We're also going to take a look at our specific government. What have we done in the past? And our economic incentive. Is it likely that we're going to continue a contract or not? Is a potential change in technology development going to affect how we're using technology now and need to change that into the future? We're going to take a look at a history of what we've done before. Have we always renewed contracts? Have we never renewed contracts? I know Jared's got things to say about this later. We talked a little bit about that yesterday. But to recap the term, we're going to review all of our contracts for that non-cancelable period, paying close attention to renewal criteria for both the government and the vendor, and then paying attention to cancellation or termination provisions as well. I also want to mention, don't presume that a contract is out of scope due to timing. Remember that we're going to take a look at these contracts and figure out if they meet the definition of control, period of time, exchange-like transaction, and then what that term would be. So keep an eye on, just maybe keep an eye on that. We get lots of questions, as you can imagine, about term. This is a sticky wicket, if you will. And remember, we're going to take into consideration some of those economic-based and government-specific factors as well. So what have you done in the past? A short-term SBITA is one with a maximum possible term of 12 months or less, including extension options, regardless of their probability of being exercised. So much like determining the term much like determining the term of a subscription that goes longer than 12 months, we're going to exclude cancelable periods when determining if it's 12 months or less. Now, a 12-month term that you plan to renew is not a short-term SBITA. So we're talking about really just 12 months or less, and determining how to handle that. If it's a 12-month contract that you plan to renew, then it's considered long-term and you're going to record it as a subscription liability and subscription asset. And if it is not, it's actually a 12-month or less contract, then it's just going to be recorded as an outflow of resources. Noting a couple of exceptions. If you plan to make the payments in advance, then in advance of the reporting period where that contract is in place, so say it's a 6-month contract, we're going to pay for it prior to our fiscal year end, then it should be recorded as a subscription liability. GASB 99 also clarifies that a short-term SBITA that has been modified to extend the initial maximum term should be reassessed from the beginning of the contract. So there's some specific notes to take into consideration there. And GASB 99 also clarifies that termination clauses for default, which I kind of mentioned already, such as non-payment, are not options to terminate. That, you know, if you didn't pay and then, you know, your contract is canceled, it's not necessarily GASB 96. It's going to be handled a little bit differently. So let's talk about exclusions. I don't know about you, but I like to know where I do not have to spend my time when we're talking about new accounting standards. Probably not exhaustive list of exclusions, but there is no such thing as lessor accounting under GASB 96. We're going to exclude also perpetual contracts. So those that go on forever and ever and ever and ever, something that you might have that's never going to be canceled, or that's doesn't have a term associated with it. I might think Excel might be one of those types of things, depending on what kind of contract you have. Cancelable terms, we talked briefly about this already, where both the government and the vendor can terminate without permission from the other party. Those are excluded from the term. Also important to note that cloud-based storage might not always be a SBITA. In this case, it's important to identify or pay attention to the control part of that SBITA definition. GASB 96 does not apply when the IT software component is insignificant when compared to the tangible capital asset. So what do we mean by that? As an example, back in my day when I used to manage leases and things for things like buildings and copiers, you might have a copier, right? That's a lease. And there might be a software component of that. That software component might be very insignificant when we're taking into consideration the whole contract. That's what that means. We're also going to exclude tangible assets like that copier, like that server. That's likely going to be accounted for under GASB 87. We also have contracts that meet the public-private partnership definition, which is covered in GASB 94, which is also very similar to 87 and 96. We're not going to talk about that today, but those are not covered under specifically GASB 96. And then finally, we're going to talk about materiality just for a minute. You get to make the decision about where materiality falls best for your government. And what that means is identifying what your materiality threshold is and applying, making sure then your contracts are in scope as related to that materiality threshold. We're seeing these being all over the board. We do a ton of research in this particular topic, and we see that in some scenarios, those are based on annual payments, sometimes based on total liabilities. So it's really going to come down to what works very specifically for your size of government and type of government. And Jared's going to talk more about that.
Yeah, thanks, Jess. Appreciate it. I told Jess I wanted to at least add a little bit of commentary here on materiality because we've dealt with this quite a bit as well. With 87, of course, we haven't really implemented any 96 yet, but I think it's important that when we determine materiality, well, I guess first is to know that the ultimate determination on materiality is your auditor. So you can decide whatever you think materiality is and go with it. If your auditor disagrees, there's a chance they'll win that battle. So be careful with that. But we really want to focus on the entire payment stream. If you end up and as opposed to just maybe the current year outflow of payments. If you have a 3-year non-cancelable agreement that we decide meets the definition, basically we're going to be capturing all 3 years payments and booking them on your balance sheet as an asset and a liability. So you want to focus on the total payment stream. And I also want to just bring to your attention that depending on what fund you're paying this out of, the general fund is going to have a different materiality threshold than food service fund 006. And we're also looking at items in the aggregate. You may have, just one SBITA in the general fund for 10,000 is not a big deal, and you could say it's immaterial. But if there's 10 of them in there or 15 of them in there, then the auditor is going to look at that in the aggregate to determine materiality. So we're here to help you with that. I can tell you, and again, obviously, we've got a bunch of different sizes of clients on the webinar here today, so there is no just rule of thumb. But I feel pretty comfortable telling you that if your payment stream's less than 10,000, it's probably going to be immaterial. Anything above that, I would definitely say it could still be immaterial. Bring it to our attention. We'll help you go through that materiality calculation. We've actually, with some of our city and county clients, we actually went as far as to reaching out to the auditor. We usually have good relationships with your auditors as well, to say, hey, what's materiality in the general fund or each of the opinion units, to really help you make that determination. So let us help you regarding materiality.
Great, good stuff. So moving on, let's talk next about components. So you might have contracts that have multiple components. So maybe it's a subscription component and a non-subscription type component, or it could be a contract that contains multiple underlying IT components in addition to a subscription component. So there's all different ways that components can kind of work together. Generally, a government's going to account for these components separately, allocating contract price to those different components. I just had a conversation last week with somebody who's like, I have no idea what to do about this. How do I figure this out? So if a contract does not include prices for individual components, or if the prices appear to be unreasonable, you're going to use your professional judgment to determine the best estimate. And further, if it's not practicable to separate those components, we're going to account for them under a single SBITA. So that's important to kind of keep in mind as well. Stages of implementation. So this might be new. This is different from leases. In GASB 96, we talk about the different stages of implementing software. So there's 3 stages we're going to talk about just briefly. The first is the preliminary project stage. This is when you might be thinking about a project. We're going to decide to hire a consultant that's going to help us determine if there is needed technology and help us make a final decision about, the different alternatives that we have available to us. That particular stage, any costs associated with it are expensed as incurred. The next stage is our implementation stage. This is going to include costs to get started with the software. So configuration, coding, testing, installation. This is going to include migrating data from your old software to the new software. And these costs are factored into the subscription asset and capitalized over the term. I've got some examples in the deck for later, which we're going to talk through kind of where that, how that looks different than what we were used to with leases, and how that might just kind of be something you'll need to keep an eye on. And then finally, the operation and additional implementation stage. This is for ongoing maintenance, technical support during the duration of the subscription term. These costs are expensed as incurred unless there's an increase in functionality or efficiency of the subscription asset. So say, for example, that we get through our initial implementation stage, the kind of majority of our subscription is installed, but then we've got some ancillary additional things that we're going to install, more modules, more efficiency, more stuff. In that case, some of those costs would be capitalized as part of the subscription asset. So I'm going to just kind of keep in mind that third stage has both. Important always to note that training costs associated with a new SBITA are expensed and not included as part of your subscription asset. All right, so let's take a look at what's included in that initial measurement. For those of you who might be familiar with leases, this is going to be very similar to what we talked about when we were talking about GASB 87. We're first going to figure out our fixed payments. Those are usually clearly called out in a contract. But what we do know about GASB 96 is that SBITAs many, many times have annual payments that you make up front. So we want to keep in mind as we're thinking about our subscription liability and our subscription asset, which we'll talk about in a minute, that fixed payments are going to be, something we keep a close eye on. Variable payments based on an index or rate, we're going to measure those at the beginning of the term. Sometimes those are fixed in substance. We're going to keep track of those as well. That's all going to be part of our payments that we use to determine our subscription liability. We're also going to include payments for penalties for terminating a SBITA if we're reasonably certain to exercise that termination clause or maybe a fiscal funding clause. We're going to include payments in that subscription liability. Anything else that's reasonably certain to be paid. Sometimes there might be incentives receivable from a vendor. I think that's going to be pretty rare, but it might come up, so we want to keep that in mind as well. And then what other payments? There might be other payments associated with that SBITA that fit this kind of definition of fixed or variable that we're going to include in our initial measurement of our subscription liability. So how do we measure that subscription liability? Again, present value of the payments expected to be made during the subscription term. So if you're familiar with 87, basically present value of future payments during the lease term, this is pretty similar to that. We're going to use our discount rate that's either implicit in the contract, which is probably not going to be readily determinable most often. So you're going to use your estimated incremental borrowing rate. We're going to use that discount rate to discount back all of those payments, and that's what's going to determine our subscription liability. Once we know our subscription liability, we can then determine our subscription asset. So we add in any payments that were made to the vendor at commencement of the term or prepayments. We're going to add in any of those capitalizable initial implementation costs. So we talked about that initial implementation stage. Any of those costs are going to be added back in to determine our subscription asset, subtracting out any incentives received. It's important to note that subscription liability and subscription asset might not equal. So a couple of scenarios as to why. If I have a large implementation cost, maybe I paid $50,000 to start my implementation, we're going to add that back in. And you'll notice that that's going to increase our subscription asset by $50,000. You might also see differences when you have an annual upfront payment. So remember, no present value on a payment I made today, or if today's the beginning of my term. So that's going to be added into my subscription asset. I've got an example later that will, I think, help kind of drive home that particular concept. For me, I like to see it in a debit credit land, and I need to understand kind of how that all works together. When we determine the present value of the payments, remember that we didn't include that payment made today. That's why it's not included in that liability. So subsequent measurement. All right, so we've recorded our subscription asset and subscription liability. Then what? We recognize the SBITA at commencement of that term, and then we're going to amortize the asset in a systematic and rational manner over the shorter of the term or the useful life of the asset. That amortization is going to begin at commencement of the subscription term. Amortization is recorded as an outflow of resources, such as amortization expense, and we're also going to record interest expense on that remaining liability. This is the discount rate divided by the number of months multiplied by your remaining liability. People seem to have questions about that pretty often to our support team, so I like to talk about that. And we're also going to record things like short and long-term liability, or due within 12 months and due, longer than 12 months. And under GASB 96, we're going to account for modifications and terminations, very similar to what we did with leases. So if something about your contract is changing, we're going to freeze the original calculations and then record that kind of moving forward. If a SBITA terminates early, we're going to reduce the carrying value of the asset and liability and recognize a gain or loss for the difference. So if you're familiar with changes to leases, this is going to be very similar. And then disclosure requirements. Let's take a second to talk through these. So in the notes to your financials, you're going to disclose all sorts of information about your SBITAs, general descriptions, the basis, terms, and conditions on those variable payments that are not included in the measurement of your subscription liability and subscription asset. Maybe that's usage. Sometimes you might pay a contract based on usage. You're also going to disclose your total subscription assets and related amortization separate from your capital assets. And if you're using LeaseCrunch for GASB 87, you're going to run separate disclosures. We're going to have that all handled for you right within the software. You'll also include information about your outflows recognized in the reporting period for variable payments that aren't included in that subscription liability. Termination penalties that were paid that maybe weren't part of that subscription liability. So for example, if something about that contract changed, we didn't expect to pay a termination fee when we were at the beginning of the contract, but then we ended up having to terminate early and pay a fee, we're going to include that in our notes. We're going to also include our principal and interest requirements to maturity. That's going to be presented separately for each of the next 5 years and then 5-year increments thereafter. Again, very similar to what we saw with GASB 87. We're also going to include information about contracts we've signed but haven't commenced. So maybe we decided we're going to go forward with this implementation project and it's not going to start until August, but our fiscal year is June or July. You want to include that information as well. Components associated with any losses. We're going to talk about those in our notes as well. And then again, for fiscal year 23, which is our first year, that's where we're going to include our balance restatement details, which was very similar to what we did with 87. All right, so now let's talk about getting organized and starting your implementation. So if you haven't already been thinking about GASB 96, now's a good time to start. So we're hearing from many of the firms that we work with, many of the clients that we work with, that they're probably going to have more SBITAs than they had leases, which means it's going to take probably longer to kind of prioritize them and go through them and be thinking about, does it fit the criteria, does it fit materiality, and how does this all work together? So don't wait to get started. We want to make sure that we're educating departments involved so everybody's aware of the changes. Jared and I talked yesterday and again this morning about, hoping that some IT folks are on the call today to learn a little bit about what 96 is, so we can be thinking about what contracts we have and what might be in scope. Departments, here's just a short list of the departments that might be involved and might need to know what's going on. We're going to identify those contracts. We're going to talk to everybody. No offense to the IT folks on the call. I am one of you. Don't let your IT folks make a decision about if it's immaterial or not. Jared mentioned this earlier. Calling your auditor to find out what your materiality threshold is going to be really important in this process. We want to evaluate each agreement, extract that data, all of those key terms. What is the renewal criteria? What is the termination criteria? All of that kind of information is something we're going to have to pull together. And we're going to also take a look at our capitalizable implementation costs. Remember those 3 stages and how those costs are associated. I want to take just 1 second right here to talk about transition. So we have, I'm sure that you have subscriptions that you had prior to 96 going into effect. For those transition agreements, there is a clause within paragraph 64 of GASB 96 that tells you get the choice of what to do with the implementation costs associated with those transition contracts. So you get the choice of, I'm going to include it as part of my subscription asset moving forward or not. Kind of really open-ended in that particular topic. So other things about planning for implementation, you might want to centralize the processing for your current agreements to help you make decisions about those renewal options, those termination options. If you, as the finance team, don't quite understand what the contract is, enlist your CTO or your IT folks to help you understand those complex contracts. I know for a fact that there's contracts out there that are for subscriptions, but doesn't really tell you what it's for. That's super common. I probably read a million of them in my career. So enlist your CTO or IT folks for additional help on that. Apply what you've learned from GASB 87 to your 96 implementation. So if you knew that you had leases all over the place and you had lots of divisions and lots of different people that were signing them, you might have the same for subscriptions. So how can we be thinking about that? Whatever you learned that worked best for your organization under 87, you can apply those same concepts to 96. And I also think important to remember that we're going to probably need some different GL accounts for that subscription asset and subscription liability. Highly unlikely that we've already got those into our chart of accounts, so we'll want to start with those. You can do that now and it's pretty easy, and then we're not super under the gun later. So this is just a short list of what kind of subscriptions you might have so that you can be thinking about all of these things. A non-exclusive list. Every time I teach this webinar, we have another comment or another question about what could it be this, could it be that, what about this, what about that? Not an exhaustive list, but things like financial systems, your billings, utility billings, public works, public safety, textbooks, student accounts, grading, Zoom, Teams, WebEx, treatment plans for those of you who are government healthcare, if there's anybody on the call, things like maintenance management. And I think Jared has more to talk about for this particular topic.
Yeah, thanks again, Jess. Appreciate it. Just a few things. Again, we've had some preliminary discussions, and we're pretty much, have started this process with a number of school districts. And what we're hearing now, I just want you to kind of think outside the box. Obviously, you're going to have some pretty significant agreements with your A sites, talking specifically to schools here. Those are going to be pretty significant, but in most cases, what we're finding, those are going to meet that 12-month or less criteria, meaning they're cancelable. You don't have to, they're not long-term contracts. But I want you to think outside the box, and get away from the A site and think of, there's three other categories I wanted to mention. One is just with your curriculum folks. And it could just, teachers may have the ability to go and get different types of softwares that they want for their classroom, particularly with COVID. I mean, there are a lot of new and an increased number of online platforms. I think in a lot of cases, even if those exist, they're going to be immaterial, but you need to have those inquiries with the right folks, because it's not going to be within the finance office there. A couple other areas that I think we could run into some items that are more material. One is food service, for all of the technology involved, the software involved, and tracking student accounts, and even just ringing people up at the register and that kind of stuff. And then the transportation, whether it's security or tracking your fleet and things like that. We're hearing that there are some software packages involved with those operations that could also be greater than 12 months. So think outside the box. It's not just the finance office. Think about all of the buildings throughout the district and give that some thought.
That's fantastic stuff. As a person who has a child that doesn't ride the bus, when Jared mentioned to me yesterday about the busing and the security measures that buses have, it was like, oh my gosh, we have to include that on our list too. So like I said, I learned something about a new type of SBITA every single time I teach this. All right, some more tips about implementation. Let's talk about the transition. We had some example, we've had some subscriptions that we had in place when we're transitioning to 96. What do we do with those? We're going to bring those on. We're going to use the facts and circumstances that existed at the beginning of the fiscal year. So you'll measure the remaining subscription term, use the discount rate as of the beginning of that fiscal year, the remaining payments to determine our subscription liability. Paragraph B77 talks about how to handle those implementation costs. I kind of already talked about that. In this case, the board decided that arrangements that began prior to 96, you have the option to include the capital outlays or not in your subscription asset. Really kind of up to you. I would say whatever decision you make, document it so that when your auditor asks about it, you've got some good documentation about why you made the decision you made. You're also required to restate prior periods. So if you have more than one period listed in your financial statements, you will need to restate those periods. Unless it's not practicable. And paragraph 63 is very specific about inconvenient does not equal not practicable. So keep that in mind if you are stating multiple periods in your financials. All right, so let's talk about examples next. So I have two examples for you. The first is a 3-year subscription. In the scenario that we're talking about today, we're not talking about transition subscriptions. We're just talking about it's a little bit later. So what does the accounting look like? This is one I pulled right from our software. It's a 3-year arrangement for Slack, which, if you're not familiar, is a subscription-based communication type tool that organizations use. This particular contract is 1-year arrangement expected to renew for a total of 3 years. There are annual payments for this contract paid at the beginning of each year of $45,000, a discount rate of 4%, which was the estimated incremental borrowing rate for this particular government. And that's how we determine our subscription liability. So remember, our subscription liability is the present value of future payments. So in this scenario, we have a future payment on 9/1/23 and 9/1/24, $45,000 each, which gives us a subscription liability of $84,000 and change. Then we add back the payment we made at the beginning of the contract, which is another $45,000, and that gives us our subscription asset of $129,000. So you can see how subscription contracts with large annual payments can really make a big difference between your asset and liability. In this scenario, we're paying the cash $45,000 at the beginning of this contract, so we record that cash here to balance out our journal entry. And I don't have an example of this, but if you had implementation costs, so say, for example, you had maybe a $50,000 implementation cost associated with this particular subscription, you would also add that back to your subscription asset. So you can see that your subscription asset and your subscription liability could be very different. They're not as close as they were with leases. So you want to keep that in mind as we're getting started. Subsequent measurement, then we're going to take a look at that first month entry. Remember that we're going to be very specific about amortizing from commencement. So we're recording our amortization expense and accumulated amortization here, interest expense, interest payable, long-term and short-term subscription liability, or outflow, due within 12 months, due longer than 12 months, whatever the words work best for your organization. And then month 2, so this is also interesting. When I teach this, oftentimes we get a question, where's the cash? So remember that this particular example has an annual payment at the beginning of each year. So we don't see an adjustment to cash or accounts payable or our liabilities because we're not reducing, right? We didn't make another payment. We're only going to show our amortization and our interest expense here. So especially important for those of you who might have annual payments due up front for your subscriptions. These entries might look a little bit different. And I know many of you are recording these on an annual basis, recording these entries on an annual basis, so you might not even notice, but I think it's important just kind of to work this out. More specifically because it's different than leases. I can tell you that, as someone who's worked in leases since 2007, which I can't even do the math about how long that has been, this is different, right? Leases always have a monthly payment. It's pretty rare. Sometimes they have annual payments or every 6 months, but most of the time leases are paid monthly. Well, subscriptions might be paid annually, so the accounting is going to definitely be a little bit different. Next, let's take a look at a different example. This is a 5-year SBITA where we're going to make our payments monthly. 5-year term. This one is 8/1 through 22 through 7/31/27. There's monthly payments of $1,500 and our discount rate, incremental borrowing rate is 6.5%. So in this scenario, because it's monthly, we're going to do the present value of each of those monthly payments. No liability calculated on that first payment. And in this scenario, no initial implementation costs. So here, because we have monthly payments, we'll see that our subscription asset and subscription liabilities are much closer, right? Our balances are very similar, subtracting, of course, or adding back only that payment we made at the beginning. So as you can see, monthly payments and annual payments are really going to affect the calculation for both your subscription assets and liabilities. Again, our amortization and expense and accumulated amortization, we're going to start that right away at the beginning, amortizing that asset at commencement, and we'll record our interest, expense, and payable, and again, our liabilities, due now and due later. And then month 2 is different in this example because we have a monthly payment. So before, when we had only that annual payment, we didn't have an adjustment to our liability because we had no payment made in month 2. Here we have a payment made in month 2. So we're going to see that cash out, and we're also going to see that adjustment to our long and short-term lease subscription liability. I almost said leases. So I hope that was helpful. That's all I have for you today. And I think we probably have plenty of time for questions.
Thank you so much, Jess. We do have a couple. First, I do want to let everyone know we will be sending, there have been a couple questions about the presentation. We will be sharing that afterwards along with the recording. So look for that either later today or tomorrow. All right, now to hit into questions. Do we add capitalization costs paid before the implementation date of July 1st, 2020?
Great question. And the answer is, it depends if you want to. The GASB was pretty clear on giving you the option to either record it as part of the subscription asset or not. I don't know what Jared has to say about this, but I would say be consistent. If you're choosing to include those costs as your part of your subscription asset at transition, then you should probably do it for all of the contracts, not just 1 or 2. But I don't know what Jared's take is on that.
Yeah, Jess, I mean, I would concur with that. We definitely want to be consistent with that. The vast majority of our clients, there will be no benefit to grabbing, at least I believe there would be no benefit. Maybe some of our larger clients that are on the call may want to pick up that large asset, but I think in most cases, it's probably going to be let's not pick that up, but we can just have additional discussions about that.
Yeah, I think that also if it doesn't make sense to do so, kind of why bother? And it's already been recorded, right? You've probably already expensed it, or maybe you're already amortizing it. So I don't know if I'd spend the time really to put it into part of your subscription asset either. Good question.
Thanks, Jeff. Next one. And then if you guys still have questions, we still have time, so go ahead and enter them. The next question, if a school district's materiality threshold is 500,000, can you provide guidance on what type of SBITAs, I've said it wrong, SBITAs,
You're good.
district should prioritize?
Jared, you want to take that one?
Yeah, I mean, I would venture to guess that there will be none. If your materiality threshold is $500,000, I would be shocked unless it's an extremely large school district. But like I mentioned earlier, I think you'd want to focus on that contract with your A site to make sure that, I'd mentioned what we're seeing is the vast majority of those are going to be 12 months or less. But you may have a situation where you've got a multi-year, you can't get out of it for a 2 or 3 year period, and you're a larger school district, that may be significant. And again, focus on your food service operations and your transportation department to see what, if any, technology or software is related to those two. That's where I would focus from a materiality standpoint. But at 500 grand, that's a pretty large threshold.
Thank you, Jared. Then if the costs were paid in a fiscal year prior to the implementation date, do we need to account for them in the implementation year or exclude them and consider them expensed in the prior year?
Good question. That kind of goes along with what we talked about before, where your implementation costs that you had prior to transition, you get to decide what to do with them. So really, you'll make a decision. I would say be consistent among whatever other subscriptions you have, and then probably document that decision as well. So either include them or not, and then be consistent.
Perfect. And that was the last. Oh, go ahead. Sorry, Gary.
If you don't mind, Becky, I just want to chime in on the back end of that there. I mean, Jeff just made a good point about documentation. I mean, we preach this with GASB 87. I mean, this year of implementation, You may evaluate 50 different agreements for applicability and may determine that 45 of them don't apply. We need to maintain documentation of what we did. If it makes it over to us, meaning Ray, we're going to maintain that documentation. If you're making decisions on your end and deciding not to send things our way, we need to collectively have documentation for everything that we did as far as determining what applied and what didn't, because that's what an auditor is going to expect to see.
Thank you. All right, that was our last question for now. But as I mentioned, you will receive a copy of this later. And if there are additional questions that do pop out, don't hesitate to reach out to Jared. He can definitely get in touch with Jess and Andrew. Any closing remarks before we head out?
Thank you so much for joining us today. Thanks for having me.
Thank you for joining us, Jess, and all this information. It was so helpful. I hope you guys have a great rest of your day.